Me welcome on board Sandip Sabharwal and find out what his views on the markets are right now. Sandeep, hi, morning. Pretty quiet a week last one, although you did see some recovery from banks, not quite sustained through the latter part of the week though. And yeah, IT also made a comeback. But what next? What lies ahead? Because at an index level, we didn't do anything.
Yeah, so what's happening now is that domestic flows on equities continue to be strong. Foreign flows have also turned around, but we're also seeing some lack of triggers in a sort of way globally for the equity markets, and that's leading to sideways movements or some corrections, etc. So markets have moved up sharply. So there is scope of some correction, but I don't see it to be a deep correction. Seasonally, June to September is a decent month normally, and this time, given the overall outlook on monetary policy, etc., which is also panning out, and uh, the possibility of negative surprises being low, we should see the markets being stable with an possible upside bias. So I think it comes down to then specific stocks and sectors, like always.
Yeah, it sure does. So, Sandeep, what's the take then on banks which are finally making a material move? Is that the space or tilt that one should have in their short term portfolios?
So, on banks, we saw PSU banks do very well. Private sector banks took a uh, breather for a very long period of time. Now we are seeing some activity start on the private sector side. So I would think that the private sector banking side is the cheapest it has been relative to the overall market. Like it's not cheap per se, relative to historical valuation, but it is cheap relative to the overall market valuations. So I think we could see some moves in those stocks and the larger banks like HDFC, Axis, Kotak, ICICI, etc. all could potentially outperform the market.
Okay, fair enough. Let's also get in a sense then from you, Sandeep, as to what the outlook is when it comes to the broader markets, because we had seen that sort of a rally play out and that outperformance was pretty evident. Where is it that you're finding potential still within the broader markets, individual stocks that you believe investors can still play for?
There's not much change in what I thought could do well. So I think as the only basket where people can reconsider potentially is on the consumption side, where if there are normal monsoons and there are some tax stops, so that's where some sort of recovery could play out. So on the consumer side, most of the companies are the larger companies. On the smaller companies side, like some of the consumption sectors which are as it is doing well, like hotels, etc., could further get a fillip. On the other side, on the durable side, we've seen move in stocks as durable sales have picked up. So they could pick up further if the tax cuts or the rate cuts come through. And non-durables like companies which are relatively larger, like Dabur, HUL, and that entire basket, Godrej Consumer, etc. So I think there's potential for these segments to outperform.
Sandeep, soon markets will be only talking about budget and earnings. So, do you think it's time to change gears now? The momentum trades could take a back seat. The so called policy stocks, which rallied after the election outcome, they may just go on the back burner. It really could be back to basics now.
Yeah, it will be. And the sort of policy stocks, I think they are as it is overowned, and they are heavily overowned, heavily uh, valued today. So one would have thought initially that there couldn't be much to be expected from the budget. But I think given the electoral outcome and the fact that there are several state elections coming through, and there is pressure on the government to do something on the taxation front to give relief to individual taxpayers. So I think that's why this budget now becomes interesting, that whether they'll give some reliefs there. And those reliefs, Nikunj, in my view, will be very significant if they come through, because if there is some reduction in personal income tax rates, we will get the entire benefit of those rate cuts over just a 6-7 month period for the full year, because the budget will come July end. So the impact on consumer behavior and consumption would be much greater than in a normal year.
Yeah. Okay. Now, since we are nearing the first budget of the new government and first proper budget, everybody is just making a case. All of us, 4 of us, right? Tax kam karo. Who does not agree with it? Tell me. Sandeep has only 15% and 10% tax to pay. It doesn't matter to him, right? Everything is stock income, right, Sandeep?
No, that's hardly true.
Oh, you have other sources of income also. I didn't know this.
So I don't sell stocks, so I don't have that information.
Okay. Here's what ET now has learned as to where direct taxes are headed in this budget. The complete source-based information.
Yes, it's a very significant development coming in. However, we have reported earlier that the government has started working on a proposal to provide some relief in terms of tax reduction to the taxpayers, especially middle class. We are learning from our sources that the discussions have been started within the government, and the new tax regime is likely to be made attractive by providing some new relief to the taxpayers. The sources are informing that a new slab is likely to be introduced within the ambit of new tax regime, and along with that, the taxpayers earning up to rupees 5 lakh in a year, or for those whose annual income is beyond rupees 15 lakh, are likely to get a relief in terms of reduction in taxes going forward. Some process simplification, benefit of process simplification are likely to be announced by the government in the forthcoming budget. But the sources are also confirming that these discussions are at very initial stage at this point of time. But the good thing is that the discussions have been initiated and the final decision will be taken at the PMO level. But at this point of time, discussion has been initiated. Good thing is that there is expectation that the middle class or salaried class are likely to get relief in the forthcoming union budget. Back to you.
All right, that's interesting. Thanks very much for giving us that heads up. Meantime, some of the other stocks as well that we'll be tracking in today's session include some of those new age fintech or internet stocks like a PB Fintech and Zomato. Sandeep, wanted to get in your take here. Morgan Stanley talking about how despite a sharp re-rating, it's a very constructive space to look at. Would you concur, and what do you like?
I would think that post this rally, most of the stocks are deeply overvalued. So I wouldn't agree with this statement.
193 rupees for Zomato. Actually, let's look at the 1 year change for some of the consumer tech and fintech stocks. And I'm just jogging my memory here. Paytm becomes a special situation stock, but Nykaa has done nothing. Delivery has done nothing. Policy Bazaar and Zomato are two stocks which, from deep cut, they've become the high flyers. Delivery in last 1 year is what, at 5%. PB Fintech has doubled. Zomato has given a return of about 150%, 160% thereabouts. And Nykaa, which in a sense had the most rara listing, has started underperforming. Sandeep, time to look at Nykaa? I mean, now things are getting settled. It's a business which still generates cash flow.
I would think so, because I would think that Nykaa is a stock which I always believed will perform at some stage. So now if we are coming at a stage where the company is trying to get some costs under control, and we could potentially have some benefits coming to individual taxpayers to boost personal income, personal consumption, then Nykaa could actually be a performer. So I think this could be an interesting stock to have a look at.
We were also, Nikunj had this conversation with Ramesh Damani, and he was talking about the potential within pharma and how there's a lot of developments that is taking place over here globally as well. What would be your outlook on pharmaceuticals? Where is it that you would find comfort within pharma in light of the fact that valuations aren't quite as attractive?
Yeah, so I think the last part one is most important because valuations are not as attractive as they were. So among the stocks we used to have, we sold out Lupin, but we are still holding on to Sun Pharma. The smaller pharma companies, I find it tough to evaluate. So many of them can potentially do well, but I don't have the bandwidth to go molecule by molecule and evaluate those companies. But I think Sun Pharma is a decent business model, so we are just holding it for the long term.
We're talking about per capita. We're talking about upgrade in lifestyle. All of us now are getting more and more aware about preventive healthcare. All of us can afford better healthcare. We can buy better medicines. Is it a good time now to, let's say, start buying Indian-focused pharma companies? You may look at MNC pharma companies which have a presence in India. You may look at a company like Mankind, which is only domestic. Alchem, which gets a big business from antibiotics. Cipla, very deeply entrenched in India. Unlike US generic companies like, let's say, Aurobindo Pharma or Lupin, look at the other way around. I mean, why bet on Indian companies benefiting from America? Look at Indian pharma companies which would benefit because of India.
The only issue investing in domestic focused pharma companies is that their growth trend rate will be between 7 to 10%. And if they have already outperformed and reached valuations of 30, 40, or 50 times for some companies, then with that kind of growth, it's tough to sustain that. The reason why cyclical opportunities are presented by companies which are focused more on exports is that uh, big opportunities come up sometimes, focus on specialties, give them some extra profits, etc. So that creates the opportunity in those companies.
Sandip, if I compare SBI versus HDFC Bank, the classic outperformance in HDFC Bank is back. It has gone almost to a year high and it has crawled back all the gains, all the losses it had, Sandeep, after that result debacle 2 quarters ago. Has HDFC Bank finally rediscovered its mojo? Do you think this really could be easy, obvious and a safe trade for rest of the year?
Whether they have recovered their mojo or not, time will tell because indications till the last quarter were that it's not there. Now, because it's underperformed so much, so there is a large set of investors who are now more comfortable investing in HDFC Bank, although it continues to remain a overowned stock, but not as overowned as it was maybe 2, 3 years back. So, and if we see the performance of private sector banks vis-a-vis PSU banks, so PSU banks always have a higher risk of greater NPAs overall over the long term, whereas most of the private sector retail focused banks have handled that much better. So I think this valuation disparity which reduced became very small, and now I think the outperformance of private sector banks has started, which I think should continue at least for the next 1 year.
Let you go on that note. Thanks so much for joining in. Let's check in on the pre-open rates this morning. And for now,
if you like this video, then like, share and subscribe to ET Now.